gold's one of the first when there's a potential disinflationary event, a bit of a demand-destroying event that's about to hit that could be close, that will react early.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 11th through November 18th, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the Market Sniper. Francis, thank you so much for joining us today.
Always delighted to be with you. Thank you for having me on again, Elijah.
Well, it's great to have you today. And we're seeing a significant pullback in the metals here. Gold, 2,500 or so. Silver dipped below $30 this morning. Your take on what is happening? It seems like we're seeing quite a sell-off here.
It has been a strong sell-off. So a couple of things for everybody to bear in mind that have been happening. You mentioned in our pre-discussion, the US 10-year has been climbing. It's climbed into the face of a double rate cut and a follow-up single rate cut. Combined with that, actually, the dollar index has also been climbing. So the dollar has been exceptionally strong, running from just over 100 on the Dixie index right the way up to 107. So it's put on 7% in the last couple of months as well, which is quite a headwind typically. Don't forget, gold's also run since the 1984 value, which was the low of February when we had our last little HVF, our squeezing structure, where we were really excited and appearing on your show and saying this is a big breakout to come. It's still 30% to 2,500. That's $500 on a 2,000 number, a little bit more if you take the 1984 value. So it's still a decent move, 25% since that February period. And it's not a full year either. So we've got to just remember you never measured at your high water mark. And there is no such thing as a straight line up. Then you had the whole Trump trade. And we must remember that Trump was pro-dollar and then also has pivoted to a degree to also being pro-Bitcoin. The one that's missing there is gold. You'll note that it doesn't form part of the discussion. The dollar and the debt system go hand in hand. The fiat and debt are twin sisters, and they are the old legacy system that is in a state of failure. And the new captured system, for me, is the digitized version that they are preparing us for. And you note how that skips over gold. And it's a typical central banker ploy as well. Don't discuss gold. But when you speak to many of the heads, I've got a document here from Greenspan when he wasn't head of the Federal Reserve, saying what a great rev limiter and how gold kept central banks honest and all of these rather sound money type statements. And then once he became Federal Reserve, gold is something they don't discuss, but they watch on the quiet. And only Ron Paul poking him and Shlomo Bernanke every now and then around gold and proliferation of fiat actually ever saw the topic come into the discussion. So politics and the central bankers are not going to be making statements around gold, but they'll be quite happy to position the digital gold version, which is Bitcoin, in front of the on-ramp into the real gold to siphon off some of the new money. And of course, technically, we said this on Crypto Sniper, our sister channel, that Bitcoin's going to start eating gold's headlines now. And this was roughly 3 weeks ago. So tail end of October, because it broke out of a broadening structure. And I'll show some of these charts for you in a second. But just to answer the question verbally first, before we get visual, that's basically in a nutshell what's been going on. So strong dollar, Bitcoin now hoovering and sitting in front of the gold funnel for all the fiat that's escaping. And also to a degree, some concerns around the overall economy as well, because I think there's Gold's one of the first when there's a potential disinflationary event, a bit of a demand-destroying event that's about to hit that could be close, that will react early. And we've seen it also in the oil market, with oil being very, very soft. So there's all of these things at the macro level. Don't forget, gold's also done a magnificent move and is the first mover. And again, I'll show you this diagrammatically, which is really nice to visualize in a minute. So it's Bitcoin's chance to stand up, and it's in a second to gold as the key in the anti-fiat category. So that's my initial take.
It is quite impressive what we've seen with Bitcoin hitting 90,000, an all-time high. I did want to get into the gold and silver charts if you wouldn't mind maybe pulling those up. And some people might be concerned with a pullback this dramatic. Are we breaking any key levels, or is this just normal kind of par for the course when being in a bull market as we have been?
I don't think anybody should truly panic about any of this, Elijah. There's a tendency when things are quite abrupt for people to panic a little bit. I'm going to just take you into a couple of things, if I may, to share. I just wanted to conceptualize. This is how we frame things, and I put a diagram up. The anti-fiats as category, first of all, and we put the king of diamonds in there because there aren't any gold bars in the figures of the card pack. But he's the first to move. Everybody sits down after the king sits down, and the king is the first to get up and leave the table, and everybody waits to go. And that's why gold was running first and hardest, and he's the first key mover. Bitcoin is a subset of the anti-fiats in crypto, but he's the king of the smaller crypto category, and he moves first compared to his peer group. But he's moving after gold, and this is kind of where we're at. And I refer to it's an engine, a V12 engine that has a cylinder firing order. And this is how things go down. So that's why I've continued to emphasize people rather be in gold than silver. This is not the first time I'm making this message to you right now, and we'll go and check on charts with that as well. But it's important that people recognize that the new system that they're probably implementing isn't going to be in by end of Q1 next year. This is a decade and a half cycle where everybody's properties are registered on the blockchain, and everybody knows who's got which assets and how much their net worth is, and all of this surveillance finance game. It's going to take a while of installing that. I'm hoping you and I will all be resisting that, and maybe even eventualizing something else. But these are big forces working against us, but they've got a lot of just system stuff to get through. And if I take you to the charts, this was the gold above, and just to emphasize that gold moved first. There's the continuation pattern from the lows. Now this, by the way, it's important to say that's a 3-week chart for gold, but because Bitcoin has a higher speed rate, this is a 5-day chart. So each candle is 5 days. So it's dog years for Bitcoin, if that makes any sense. That was the continuation pattern for Bitcoin. Then you had the ETF for Bitcoin, BlackRock, all the guys that led that run. Of course, this had already happened before. That was the run up to 2011 highs. Then we had quite a lengthy period from the highs of 2011 where we were in this descending megaphone structure that I've drawn in there, eventually breaking over here and then moving on up. So these charts were all done when this newsletter that's totally free and on our YouTube if you want to grab it under the free course. 1st of November was done, and you can see how far gold had gone. It hadn't yet begun its turn down. But just as that was happening, we were pointing out the descending megaphone of Bitcoin was just breaking and starting its reassertion move to the upside. It's a tiny bit small. I hope everybody can see that. We can go to the bigger charts in a minute now. But you can see the structures and the similarities technically, and you can see that Bitcoin follows its king, gold. And you need to be in gold first. If you were in gold first over here, you were making upside. And in fact, Bitcoin was still in its megaphone and selling off and going down on the carry trade dramas. It fell from 70 right down to 49. It was still chopping about. Gold was soldering up. Then 3 weeks ago, we said, it's time to overweight Bitcoin now, and gold could rest, and you could have Bitcoin eating the headlines. In other words, grabbing the new headlines as the star mover. And that's exactly what's played out. So you can see it follows. And it's part of that Trump trade as well, which immediately means there's lots more new, fresh things that are sucking some of that anti-fiat money that is exiting the debt market. Remember, as the US 10-year goes up in rates, that's actually a contraction in valuation of the debt market, which could also mean people exiting it as well for other assets. You've got a super high valued stock market, and now people are even worried about going into there. So you're seeing the monetary alternatives of a digital version with the Trump narrative and the fact that he showed up at the Bitcoin conference and various other things driving Bitcoin. And a final diagram before we go to charts proper, that V12, as I highlight, first mover, gold, and that's where you want to be weighted. And the key thing about how we play this is you need to stay in gold. Everyone's going to jump to the next, try get ahead of the game and jump into silver. You're going to be too overweight in silver too soon if you want to take the moves, a large part of the moves of each category, because they're not perfectly synchronized. They're not starting on the same day. One is not dominating in the same way as all the others. You're actually getting lead steers that move first. Gold is lead steer on all the anti-fiats, followed by Bitcoin on the crypto side. So that's why we've sort of said first cylinder and fifth cylinder, and then you might get silver, a little bit of miners, and the alts run as well in the crypto market. So I just thought I'd share some diagrammatic visuals, which kind of are a little bit something different for what you normally get from me in terms of the markets. We can also go over to the charts themselves. I'm going to go and show you an interesting one. Stop me if you want to jump in, Elijah. This is Bitcoin and gold together. It's Bitcoin divided by gold. So many people will say, and let's be frank, I don't trust Bitcoin. I think it's part of the digitization of everything, but it's going to go up if they're going to inflate a new system that has to take a lot of the luggage from the old system that's contracting and collapsing. They're going to have to move a stuff. So we're in a period of transition where you are moving the old, all the luggage off the rickety old iron horse railway onto this new monorail. And they've got to also inflate it by market cap for that to happen. So you will get overperformance in the digital gold relative to gold. It's only a 1.75 trillion market cap at the moment compared to gold, which is probably 15 trillion. So Bitcoin has ground to overperform. So there is a reason to have some generally. I don't know how it ends when the CBDCs come. That's a bit of a question mark on sustainability, survivability, because I would imagine everyone would trade in their CBDCs for Bitcoin. So don't lose your head. But I will show you a couple of things that happened before. We have our HVF structure here that happened on the 2018, 2019, 2020 setup. And that breakout gave us a perfect top at the 64K. What are we talking about here? Remember, it's Bitcoin divided by gold. So this is gold ounces. You were down here at 6 gold ounces to secure 1 Bitcoin. You went up to the target, which was 34 ounces up top there. That was a great exit. By the way, if you sold your Bitcoin and took back 34 ounces of gold, it dropped in the bear market all the way down to around 9. So if you then got your 34 ounces of gold and you traded 9 in for a Bitcoin again, you would have actually got almost 3 and a bit, and you would have now gone back up to 34 at that point. Then we've had the underperformance of Bitcoin. This is more recent history in those 2 megaphones that we were talking about. Gold broke first, and finally now against gold, Bitcoin has broken out. And this is the breakout. What is the target we have for that? It's 106. That means at the top, it will be around 106 ounces. Let me just make this a little bigger for everyone to see. This is, of course, log scaled because there's exponential moves. But if you go to 106 from where we are now, 34. By the way, the break occurred at 27. So 27 to 106, it's about a 4x. So again, you want to rather be in Bitcoin. Again, I'm not selling my gold. Don't get me wrong. I'm not selling the allocation I already have for silver, even though it's underperforming gold. But I will buy more Bitcoin right now on the basis that at 106, just before the next bear market, I will take the 106 gold ounces back and then buy Bitcoin again at some lower down, like you had over here. It's a bit like a methodology of the gold-silver ratio trading. Some people have said, now that's slightly fallen apart, but you used to, sell your gold when the gold-silver ratio was 75, 80s, and buy it back when it was at the 30s. And you could effectively change your weighting between gold and silver when you're at the top end of the range, dumping your gold for silver, say at 75 times. We, of course, have gone a lot higher, and it's got a little bit perverted recently, and we'll come to that, but buying it back at around 30. But you haven't been as low as 30 in a long time. So in some senses, this Bitcoin versus gold trade has replaced that opportunity. The difference is it's not a range like this. There is an upward bias to this because each time Bitcoin is making a higher high in gold ounces and a higher low. But nonetheless, it allows you to do your weightings again. And this is quite intense, this new move. So Bitcoin is going to continue to steal the headlines for a bit, I feel, against gold. With the one joker qualifier comment, there is a really precarious macro market at the moment right now. And were we to roll into a collapse, you'd rather be in the gold. The downside will be shrugged off a lot faster than you would on the Bitcoin. So remember the higher beta. So it's not for losing your head either, but there is an indication of greater performance.
Now, if we do go into a demand-destroying event, which you've mentioned how the 10-year yield is signaling, if we do see the yield come down, that this might be signaling that what we could see in the 10-year yield coming soon might be a demand-destroying event. So can you expand on that, and what would it mean for gold and silver? Because I know you've also said how silver could even go to the mid or low 20s if we were to see this kind of collapse.
So it's interesting what's happening here. So our fundamental bias and our basis for everything is that we are in a debt-based collapse, which is meaning that rates typically on the debt will be going higher. And I've already mentioned you've had 3 cuts, but you've actually watched the 10-year do that. However, it's not going to go up forever. And if we are in as weak an economy as I feel we are in terms of consumer and retail, and also jobs markets clearly being found out, not nearly as rosy as projected, all the downside reason, housing market, 30 years are now 7%. That's going to be a major problem for new buyers and people needing to exit or downgrade at the moment who got on at finance at 2 or 3 of maybe 3.5% during the zero era. People won't be able to sell. And if they have a job loss and they become a forced seller, then they're going to start cracking the markets in terms of price, because it's at the margin that price for property is made. And if there's a desperate seller who's lost his job and doesn't want to get blacklisted or credit damaged, he's going to become a forced seller and will take quite aggressive offers. What's happening on the 10-year is we feel that it's actually done a little too much. I'm just going to take my blue flag out the way. You've already had a shooting star here. This is a sign of fatigue. So that's the second candle from last, that one there. So you were here, and then you went up, and then you got knocked back down. We are trying again currently for this week, which is not yet complete. So you're looking at an incomplete candle. But I feel there is resistance, as there has been there at the 5. That was predicted by us, by the way, that you're going to run 5 and that you would have a rest. Now you're in a second meet there, and we're at a point where I feel that this could be an inflection point. So the Trump presidency could very soon get some pretty harsh economic events that could be very destabilizing. Look, it doesn't have to be all American themed. There's 1,000,001 reasons why the American market could collapse. Repo, banks, we've touched on many of them. But there's also reasons the European market can collapse. Germany is falling apart, etc., etc. So there could be a real contagion event that could be actually internationally flavored as well as American flavored. And I would imagine that's going to drive a little bit of fear money back into bonds, which will see us pull back into this range over here. Eventually, however, whether you come back to the midpoint here or you go all the way down one more time, we typically expect 3 impulses, and it's very standard in a falling wedge. And you've got one here already made. You've got the second. And as I say, even when we were down here, we were expecting the rates to go up to the other side again. But I couldn't reconcile myself to talk about it too much because Powell was talking about cuts and did a double cut and then was saying there would be more to follow. And it went up anyway. By the way, I just want to make a small sidebar point on that. Those that think the Fed have exclusive rights about setting the rates, another thing we've repeated many times on your show, the market sets the rates. And if you're creating too much bond supply, long-term bond supply, people are bidding lower and lower and wanting a higher yield. They're going to pay less and they want a better return, especially if inflation, second stage effect inflation's about to start. And it's never after the first surge of inflation that the worst moments come. And I feel we've got another surge of inflation to come and many others. And another point on inflation, by the way, tariffs. Tariffs add cost to the price, and it will affect domestic market. So if that's not just threats, if it's actually implemented, Chinese goods, they're not going to sell at a loss because Trump's ordered tariffs. That price gets put on top, and they want the same returns they always expected to make. And the US consumer pays more. That is importing further inflation. Remember, Walmart lives on Chinese supplied goods. So they aren't going to start producing at a loss for Americans and Trump's tariffs. That's got nothing to do with them. The price just goes up by the tariff. So everybody applauding, yay, punish China with tariffs. It is a self-inflicted inflation play on your domestic population to talk about tariffs, because no one's giving you a free lunch. So quite a lot to unpack there, but I just thought I'd leave that with you as well.
So if we're going to see a demand destroying event and potentially more inflation as well, what impact is that going to have on precious metals? Because it seems like inflation would mean, higher precious metal prices, but a demand destroying event would seem to put pressure on the prices. So can you expand on that for our viewers?
Yes, so there'd be a spell of disinflationary forces. This would be that kind of nasty feeling that you got during CV19 and subprime, and you would actually get a bit of flushback money into bonds on the basis it's safe, although less and less so. And that actually is the pivot of reserve assets away from debt markets to gold. I think gold is already selling off on a little bit of a predictive or already sensing the demand-destroying event as well. This dollar surge is abnormally strong. And actually, when that occurs, you could actually see, instead of all the money going back into the bond market, the reserve asset of gold getting bid back first in any disinflationary event brought about by banks, repos, usual suspects of crises that revolve around even wars. So actually, initially, one should expect precious metals to be hurt by that, but less so than the higher beta Bitcoins and cryptos and stock markets. So in all previous events, CV19, etc., gold dipped very quickly and came back and went higher. So that's my default answer. A small dip and go back higher. Given how much it's dipped already, it could actually be one of the few things that become a fair trade beneficiary if you have a demand-destroying event. As it starts to replace the safety of bonds, people and central banks prefer having yellow gold in their own vaults in their own country. So I don't think it will be as bad, actually, for gold. It could be worse for silver, and it could be worse for stock markets and even miners and uncertainty in other areas, and certainly for crypto, given the higher beta. So it could be more volatile for them. I'd actually be happy in cash and gold. And I think the gold will dip the least, especially on what it's already done.
Could you share with our viewers maybe some of those price points you'll be looking for in the precious metals if we do see this event?
As I say, it's difficult to assume if gold's going to go any further. You can see we had a small draw of a head and shoulders that was showing us it was a tiny bit tired on our chart. There it was, there, and then a little bit of a weak right shoulder, which was already alluding to that. So it smashed down really hard, made its target, and it's not just the head and shoulders target, it's a beginning of a short, new, low time frame trend. I'm on the 4-hour here. Remember, the macro is bull. We are bullish gold. Macro bull gold. We still have 3,000 targets. We have a 6.5, and we have a 7,800, and potentially in due course higher targets. So, you could already be at the floor here. 2,500 I would imagine is a very strong floor. This is quite a good snapback. I didn't like this. I drew this rising wedge and then went on to talk to my community. And before I even got to start showing them live, we had already fallen out of that little rising wedge. This is a much snappier rebound. Look, I can't call a bottom. It's dangerous to try catch a falling knife, but I think 2,500 is going to be a decent floor. But if you get a really chronic event, you could have a spike down, which shouldn't hassle investors, but leverage longs could be washed out. But I would expect it to snap back very quickly. Central bank buying is going to be very quick under the bid in any calamity on gold. It will not go, I don't feel it'll go too much further for very long in the event of a demand-destroying event. I fear more for silver. I think the gold-silver ratio could actually stretch higher. And until we break the 75, that might be something just to cover for you, because I know you would like me to speak on silver as well. We're still in this zone here. We could have a little bit of a dip down here, but I think the red line is the one that breaks now. Until we break this basing ascending grind line, Elijah, or the 75, the key level of significance, we're in a gold dominance period. Stay in stage one. Keep stacking gold ounces. Rotate those gold ounces into silver ounces once we break that basing ascending grind line that's over here and the 75 level, because then we're coming down to 65. Then we can start talking about that head and shoulder, non-standard, non-typical by many people's reckoning, but that would be beautiful, and we await that. But we've already been tricked once. It happened earlier, and we got it wrong because it did a small break and looked like it was going to do a run for us. I'll do it in blue when we were waiting for this, and we were grinding up. And it did a real spill and actually temporarily took out the 75. I'll just remove all the other lines again. It was kind of a fake run and got us all kind of excited. And then what did it do? It bounced straight back in with some real zeal. So they slammed that effort, and silver still not getting fully away just yet.
Wrapping up here, it sounds like, there may be a potential for a short-term fall in the precious metals, but as we move forward here, can you give us maybe a long-term outlook for precious metals? And do you believe that any pullbacks here should be seen as a time to accumulate?
I do. I actually really like this dip here. I was ready to gamble a little bit. Not the best thing to do with a trade, but I was looking earlier when it was about here to put a buy on just with the stop right there. It's kind of a tactical trade. I don't recommend doing that. It is bottom fishing. But, if there was more of a drama to come, you could run that. But you could also rally really high, and more drama to come, you could fail to run that low. So it's difficult to say because we don't know when. We don't know quite when. That's why I look at that USD 10-year and say, could be any moment that bond yield gets smacked down again. But you asked the question, Francis, give us some hope for the big numbers that we're all hanging on. So let me answer the question that you asked, and I'm going to take you out to the bigger time frames. You want the bigger targets? You have to look at the bigger time frames. Essentially, the gold bull market started with the 2001 lows back here. So the projection I'm going to be giving you here for probably the biggest number, we have shared this one with previous shows with you, but it's worth stating again because it would have been a long time ago and different people may be watching. But in essence, that projection, geometric projection, offers a 7,835. That will be a different environment for us. There will be some funny stuff happening that will have happened. But don't forget, 2,780, no one was seeing that when we were trading sub 2,000 either. And that's quite reasonable, and that's all happened just within this last 6, 7, 8 months. So that's pretty attractive, 7, 8. There's also a bigger confluence at around 6.5. So these are places, the reason I like the targets, I think we go beyond those, but they're often rest places. They're often places where you pause for a while. So those are good places to maybe take off and relax. Stop watching the chart so intensely. You're probably going to churn and not necessarily have the best things. Accumulate maybe some Bitcoin or other assets that might be moving during that period, and then come back to the gold market. So 7, 8 is very good. And that would be, again, treating this all as one big continuation pattern since 2011, a megaphone structure. And that's 2001 up to 2011, a 10-year bull, followed by the better part of 10 years of sideways to the 2021 high, and then a further 3 years in a smaller megaphone, and we call this fractalization, where you get the same pattern happening inside on a smaller time frame, also on a bull bar like that. So you've got a megaphone under here. So that all on the 2000 round number, which shows you derivatives, because pegging is a concept that's very specific to derivatives, options, calls, puts, round numbers, and it's self-enforcing. So psychologically, we had the big megaphone and the smaller megaphone. This was a seminal break. So believe you me, this ain't over. This is a pullback in a journey that's going a lot higher. This might be, Ellioticians may say, an A, B, you get a B, C, and then you come in for your biggest leg, the third leg, which is often 61.8% larger than the previous leg, and you get an up move there. Then you get again a pullback. This ideally we might want to have happen at one of our targets. Then you get a pullback and a churn and a bit of sideways, and then you go for your fifth leg to the upside in that environment. So very macro bullish. It's all subject to time frames. Short time frames, yes, there's been a pullback, but even still, I would never short the gold, and I would never long the debt markets. That's where I stand. So it's a fishing opportunity for investors. Traders should be careful. They need a pattern structure with a real hard stop before they wade in, but it could be opportune.
Fantastic. Well, we really appreciate your time today, Francis. If our viewers are interested in learning more, they can go to themarketsniper.com. You're also on YouTube and Substack. Can you tell us a bit about that?
Yeah, sure. So we have the Crypto Sniper and the Market Sniper. We mentioned Bitcoin a bit today. And as I mentioned, there was that YouTube we put out 14 days ago, which could have just swung your emphasis, helped you maximize. Reset is the experience we're going through. Fundamental financial advice for the in-between years since Volcker to today was one set of paradigms. There's a totally separate set of paradigms that apply in an event where we are getting debt and fiat failure. And it's this that we focus most on, maximizing, building wealth during this period, because there will be real opportunities despite some of the dystopian aspects of what I'm mentioning. There will be real opportunities, and it is a wealth polarizing event. Your freedom is determined by your ability to self-rely on both all your provisions, socially, financially, rather than being crushed by the financial system. And many citizens are about to be crushed by this. It is truly a polarizing event, and you'll either be going left or right, and the majority, unfortunately, will be going in the direction that is impoverishment. See this obstacle course for what it is, win out, be positive, take action, and we will be there to serve you through our community. Follow and watch us on the YouTube channels, decide if you like what we do. But gold is going to be playing a seminal part and carrying wealth over from the old system to the new. And we hope to serve many of you in doing that. Thank you for having me on, Elijah.
Thank you so much, Francis. You have a great day, and God bless.
Bye for now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 11th through November 18th, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.